This is Eric Mother.com with another quick educational video, recording this June 17th, 2021, and we'll take a look here at a concept I call market memory. So let's take a stock here, which is just a random stock. It is TripAdvisor, TRIP, and this is the 2-year weekly chart. And I want to explain, based on market memory, why this price action took place, where we've seen a recent move lower off the highs around 63, now trading in the lower 40s. So this rollover can be seen from a bigger perspective. This is the 2-year weekly. If we go to the long-term monthly chart, all data, long-term monthly chart, which is what we have here. Let me do my best to try and explain where this resistance is coming from. So the first thing that, as a side note, I see here, I wasn't going to discuss this, but there's a monthly closing high in late 2018. We came and tried to break out in 2021. We tried to break out early this year, but you can see there's a rejection there. And that in itself, that failed breakout, was a red flag of some sorts. Hence the reason we are coming off the highs of the first couple of months of 2021. But that's not what I wanted to discuss. I wanted to discuss market memory. And we can do this. Simplest way is to begin with a simple single RSI line. And it is the backtest line. And I'm going to draw it from here, connecting these lows here and extending out. Should be something like that. Actually, I can even make it something like that. And what this does, it gives us the lows here and connects to the lows there, and there's a low right there. So that line is established, and then now let's follow along and see what happens on this line. Here we go below the line, pull back here. We recover above the line, hence market memory. We recover in price. We drop below that line, and we drop. And we haven't been back to those prices. Resistance on the line here with uniform action. Resistance on the line with uniform action. Resistance on the line there with uniform action. Remember, this is the monthly chart, all data. And now we've gone above the line and back below it with uniform action. And that uniform action above it and back below it is the reason for this pullback. So now we are below the line, hence we are pulling back. So if this stock is to move higher, of course, it needs to clear and move above the red line. So there's a tremendous market memory based on this single RSI line. Above it, prices move higher. Below it, we can say that prices drift lower. Now that's why I'm going to take a look at the price memory. Let me show you another way. A little bit of a different take, but we end up with the same conclusion. So now we're going to draw this line here where we broke down. Let's do it like that. So we broke down off the highs on this monthly chart, off the highs of 2014. Take that breakpoint, draw the uniformity line, my own original concept. And we can see here we've gone above the line and back below it with uniform action. The market memory is tremendous because it remembers, the RSI remembers this break being decisive. We've come back, we've gone above it, back below it with uniform action. Hence the method is called uniformity, because of the uniform action rejection right there. And we are coming off the high. So tremendous RSI market memory, which can be used for swing trading. Now let me digress in closing, and I want to mention two other developments here. RSI 69.1, uniform activity rejection. I talk about this a lot. Above this number and prices really take off. And we can see good evidence of this even here. Its biggest, most successful monthly move came in this period when the RSI was above 69.1. And here we have uniform activity rejection at the 69.1 threshold, giving us the highs there. And we have 69.1 rejection, giving us the highs there. It's another way of saying that here we had improvement in month-to-month price action. We can say month-to-month, monthly closing highs, but the RSI made a lower high. Or the RSI made repeated lower highs. Negative divergence at the highs can be seen here. It took many months, but we had higher monthly closing highs, higher monthly closing high, higher monthly closing high. RSI high, lower RSI high, lower RSI high, and then again with that major RSI 69.1 rejection, and we see that this is another reason why prices pull back. So in this video, the main topic was the memory that the market has, which can be seen if you know how to use the RSI. Eric Muath with Muath.com. Love, light, love. Namaste.